Good morning, Jeanette. How you doing today?
I'm great, Roy. How are you?
Hey, I'm doing great, and thank you. And anybody joining us, if you got any questions, put them in the sidebar. Today, we are going to be examining the roadmap to getting a loan. What is a loan? What's origination, processing, all the steps through. And Jeanette's here to help me to explain it, all the details. Senior loan officer with American, I'm going to get this right, American Pacific Mortgage. Jeanette, what's new in the mortgage industry you're hearing this week?
Well, the chatter out there right now is that FHA mortgage insurance may be getting a little bit better. So they're talking about two different things that are being proposed. One is reducing the amount of monthly mortgage insurance. Right now it's at 0.85 or 0.8, depending on how much somebody puts down. And there may be dropping it down to 0.5%. So that would be a nice decrease. The other thing they're talking about is that right now the mortgage insurance pretty much is for the life of the loan with FHA, and there may be some ways that you can get it removed that it doesn't last for the life of the loan. So hopefully, fingers crossed, we get both of those things that take place, but right now it's just chatter.
It would be fantastic. And we have buyers, and buyers are looking for homes, and we need homes to sell. Anybody out there? Great sellers market right now. Agreed?
Absolutely. List a house for sale, be sold over the weekend if it's priced anywhere accurate.
Fantastic. Let's get straight into it, Jeanette. I'm going to ask you a couple of questions today about the life of a loan, and you've been doing them for 30 years now, I believe.
I have.
Okay. First question I have you. Could you explain origination of a loan, locking a loan, why that's important?
Sure. So when we say origination, what we're talking about is getting a complete application. So we're going to need to dive into all the details. We need name, address, social, birth date, income, assets, employment. And it's really important that you remember to be honest with your loan officer and tell them all the information, because we're going to find out. And it's a lot easier if we find out up front and we can deal with it than if we find out in the 11th hour. So that's originating a loan, is that there's 6 critical key things that we have to have that make it be a complete loan application. So the final one that we usually get is the property address. Obviously, when we start, we're pre-approving someone so they know what to go out and shop for a house, how much they should tell you they're looking for or they're approved for. But that's the origination part, is gathering all the documentation, letting the loan officer look through it so that we know, are there gaps in employment? Are there gift funds that are coming in? All of those things are okay and can be dealt with, but we have to know about them to deal with them. So that's the origination of a loan. We can't, in most cases, we don't lock a loan until they're in contract. And then when you lock a loan, you're locking for a specific period of time. So the shorter the lock, the better the interest rate is going to be, because you're asking the lender to guarantee it for a shorter period of time. Although sometimes, like right now, our company is giving us longer locks for the same price. So there's no advantage or disadvantage to locking it out for a longer period of time.
And so just a second, when we're locking a loan, we're locking the interest rate, correct?
So when we're locking, yes, but when we lock a loan, it's like we're taking a snapshot of that day's rates. So I can always move between rates, but whatever the rates were on that day, if there's different options, if somebody wants to pay points and buy a rate down, they can always change between the rate with our company. I don't know if that's true with every company, but that's something that we do allow people to do.
Okay, fantastic. Jeanette, I bring you an offer now, or sorry, I give you an offer. I've got a client in, and you've given me the pre-approval letter. Now you're ready to move on. Want to understand now what happens? What's the loan process, and what's the importance of full disclosure? I think you've already touched on that.
Okay. So when you say you're bringing me a loan, you're bringing me a fully executed contract? Okay. So the first thing we're going to do is we're going to order fees from escrow or title. We need to find out what their fees are, because when we do our disclosures, we're held to those. So fees can always go down. They can't go up. There's certain things that it can be within a tolerance, like a 10% variance range, but it's pretty tight. So we like to get those numbers directly from escrow or title, whoever is giving their side of the fees. Of course, we know what the lender fees are, and they don't change very much. So that's easy, but the escrow and title fees can be different from company to company. So the first thing we want to do is get the loan disclosed as quickly as possible, because we need that to be able to order the appraisal. And right now, appraisals are taking a little bit longer than what we would like. The appraisers are being a little picky. You know, to be honest, the appraisal are ordered through an independent appraisal management company. So in the past, we had relationships with appraisers, but when the market crashed many years ago, they took that away from us and they made us go through an appraisal management company. So in my opinion, here's a big disadvantage of the appraisal management companies. In the past, when I had a relationship with an appraiser, I could call them and I could say, please, 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 I really need this one. You know, we can you, and I could, you know, say, hey, I've got this refi. You can wait a little longer on this one, but I need this purchase done as quickly as possible. Here's when I need it back by, and you know, and I could let them know that information. So with an appraisal management company, I can't do that because they're going to assign it to an appraiser that's on our panel. And I don't get to know who that appraiser is until I see the report. So we want to get the appraisals ordered as quickly as possible. Sometimes what we're seeing is the appraisers, because of what's going on with our values right now, an appraiser will look at the report. They can see the purchase contract, so they know their goal. We're hoping to appraise it for this amount. And if they don't want to do the appraisal, they'll just pass. So, you know, it may go through 2 or 3 people before somebody says, "You okay, I'll take that appraisal and I'll get that one done for you." So that's one of the first things that we're going to do. And then we tighten up the file as best we can. We make sure we have everybody's income and assets up to date so that we can pass it off to our processor. And my processor, she's going to go through everything again. She's a second set of eyes. She's going to go through it all with a fine-tooth comb, and she's going to make sure that she's going to double check how income was calculated. She's going to review the bank statements. She's going to look at the automated findings, the DU or the LP findings, to make sure that whatever's being called out in there is what we have in the file. And then she'll get the information from escrow and from title, from the appraiser. And when she gets everything in, she's going to submit it into underwriting. There's certain things that we have to submit to underwriting, and there's other things that the underwriter can condition for.
All this is still in your office. This process, all this so far is still being done at your office, correct?
Correct.
All right. I will mention a little bit on the appraisal, and I will tell anybody out there that's a real estate agent that may be listening today, make sure you go and meet your appraisal, your appraiser, bring your comps, help them along. Don't have to say anything. Just say, I've been doing my research. Here's what I found, because it will help. I just did it recently. I give some great comps. I listed a home at what the highest price I thought it could possibly go for. And I was pleasantly surprised that it came in at full value. So
good job.
Yep. Go and meet your appraiser and just hand them your comps and say, take a good look at these with a copy of your MLS printout showing all the upgrades that you've done on the home. To me, it always works. Moving on, Jeannette, so you just mentioned, I think we're at the next stage, and that's stage number 3. We're going to talk about that, and that is, you just mentioned, underwriting. What is an underwriter, and what does it mean to get underwriter's approval?
Perfect. So an underwriter is another person that's it's a certified person. So they have designations and training and that they've had to complete, and they have the backing of the company to approve the file. So they're going through again with their fine-tooth comb, and they're checking everything. It's like a teacher correcting homework. So, you know, my processor's putting everything all together. The underwriter's going through and making sure that everything's all lined up. The underwriter's looking at the appraisal. They're looking for certain things in the appraisal to make sure that nothing's missed. they're double checking the income, they're triple checking everything. And when the underwriter approves the file, then we have underwritten approval, and we'll have two sets of conditions. We'll have prior to document conditions, meaning these are things we have to do before we can get loan documents. And then we have prior to funding conditions. And I call those cross the T and dot the I's. They're nothing that's going to make or break if the loan gets approved, but they're things that we just need to make sure happen before the loan can fund.
Can you give me an example of each, please?
Mm-hmm. So a prior to document condition is going to be something that could make or break the loan. So if we need an updated pay stub, or if we need, let's see, one that I've got right now, maybe we get underwritten approval before the appraisal's in. So the appraisal would be a prior to document condition. If the appraisal doesn't come in, it's going to change the parameters of the loan. Other ones that we could need would be something having to do with clearing something from title. If there's a concern, a lot of the prior to funding conditions are making sure that the things are done. So if there's a loan that needs to get paid off, like a credit card that needs to get paid off to qualify, that's a prior to fund condition. Make sure that gets paid off. But it's, we've already addressed it. We know that it's going to be paid off, and then it just has to be done. So when we look at our loan approvals, we really go through those conditions to make sure that there's nothing on there that we're not aware of. Because what the agents are going to ask us for is to remove loan contingencies. And so I need underwritten approval to remove loan contingency, but I also have to look through my conditions to make sure there's nothing that could cause me a problem. I have one right now that we have underwritten approval, but it was kind of an ugly file. So there's a lot of conditions in there, and I told my agents I cannot remove contingencies until I know that the underwriter has signed off on some of these conditions, because I want to protect my client. I think we have all the right conditions. In this particular case, the client didn't file their 2019 taxes. I'm sorry, 2018 taxes until 2020. And the IRS has been closed because of COVID. So I can't get some of the documentation that we normally get to validate that the 2018 taxes are true and correct. So I got what I could, and we'll turn that into the underwriter to make sure that she'll sign off on everything.
Okay. Got a wee quick question here, which I like when somebody's watching, want to make sure we can answer it. For Jeannette, thanks for checking in. Hey guys, what are the current rates? Can you tell us?
So that's a loaded question.
All over the board, right? Depending on what type of a loan you have, etc.
Right. So there's 26 different factors that make up an interest rate. And so some of the main ones are loan to value, type of loan, FICO scores. Are you taking cash out? So if somebody in general is doing a purchase and they have excellent FICO scores, meaning 740 plus, and they're putting down at least 20%, they're going to be in the higher twos. So 30-year fixed, 2 7/8, kind of right in that range.
Incredible.
% down.
Incredible. Oh, thanks for the question, and nice to see you, Virginia. I want to go back to what you were just saying. I can tell you one time that I had a great deal, thought we had loan contingency, and you were talking about things that can come up, and suddenly found out, which didn't show up on a title report, that there was unpaid alimony. And that screwed the deal. And that was way back in the day. But I would ask, two things you mentioned there. Another thing you mentioned was you asked for another pay stub, or you asked for a letter from some ex-employer. And a lot of our buyers get very frustrated because they think we've already given this information. And they get a little. So I would ask buyers, please be patient. They're only doing their job. They're just making sure before they lend you the money, they dot all their I's, crosses all their T's. And so I understand there can be a little frustration with buyers in that time.
Absolutely.
Yeah. So next one, Jeannette, wanted to talk to you about after processing loan docs, right? Is it not the next thing we got coming up? So what about loan docs? And
So
I'm assuming that once you get your final, you remove all the contingencies, we're ready to go. Where are loan docs prepared, signed? How can they be signed? Where can they be signed?
okay, so before we can get loan docs, we have to do the closing disclosure statement, or the CD. And keep in mind, sometimes we have our own language. And sometimes we'll use our language with our clients. We always try and remember that you guys don't know exactly what we're talking about, but sometimes it happens. So if you ever are told something and you don't know what it means, don't think you're being stupid by not asking. Ask, because we just get into our own world. So the CD, the closing disclosure statement, is critical, and that has to go out 3 days, 3 business days, 3 mail days. Saturday counts, Sunday doesn't, before they can sign loan documents. So we usually do our CDs when we're submitting our final conditions. So if somebody signs a CD today would be Wednesday. It would be Thursday, Friday, Saturday would be the first day they could sign their actual loan documents. I'm lucky. I am super lucky because my processor is also certified to be able to do our loan documents. I will tell you that is not typically the case. That gives me a lot of, I have control issues. I always tell people I'm in a 12-step program and I'm on step 2. My husband shakes his head. He's like, you're not even there. But having the control and the ability for my processor to draw our docs gives me a huge advantage, because she knows, which clients need to sign right away. She knows my clients. She's talking to them throughout the process. She knows who's on vacation, where they need to sign. But most places don't. Most companies, they have a separate department that are going to issue the loan documents. The other thing that I do that's very different, I like to sign my loan docs in my office, because if the client's in with me and they have a question or a mistake, I can fix it. If they're at escrow, I can't fix it. But we always give our clients the choice, especially during COVID. Some people aren't comfortable coming into an office. Some people want somebody to go to their house or their employment. Some people it doesn't work for them to take time off work, and we need to send a notary out to them. So we have a notary. She doesn't work for my company, but I consider her part of my team. And she probably signs 80% of our clients. So she knows our loan documents. She knows if there's an issue, how to get it resolved right away. Sometimes the escrow and title companies have their own people that they require do the signings, and we'll work with that as well. But if in my perfect world, you're going to come into my office, I'm going to treat you like royalty. We're going to roll out the red carpet, and we're going to make it a celebration.
We cup of tea, maybe? We cup of coffee?
We have one of those little coffee makers with all the different choices for them.
Hey, we are going out to Trinidad. Bibiana, nice to see you. Thanks for checking in all the way from Trinidad. So, and Virginia, I'm going to put Jeanette's information on here regarding the refi rates and that type of thing, so you can give her a call. It'd be a good opportunity just to give her a call if you can. Do you want to mention anything about refi rates for Virginia again?
Yeah, refi rates, they're the ones that are really going to be all over the board. It depends on if you're taking cash out, if you're not taking cash out, what your FICOs are, what your loan to value is. I will tell you, I looked for a client this morning I gave them 2 options. They had about 720 FICO scores, so not quite the best they could get. With cash out, they were looking at about a 3.25% rate, 3 3/8. With no cash out, they were at 2.99. So that kind of gives you a little bit of an idea between if you're pulling cash out or not, where the difference in rates will be.
All right, Jeanette. Virginia, her number's on the phone there. Give Jeanette a call. She'll be in the office today, and you can discuss your individual loan refi that you need with her. Jeanette, once we get that, we've just come out of your office now, and we are now moving on to the next stage, which I believe is the fun.
Yes.
So we've got funding and we have recording.
So in California is not a wet funding state, meaning that we don't typically fund and record on the same day. And I know that's different from state to state, and people that are used to or have bought in other states, they sometimes think, well, I signed my loan documents, I'm done, my loan's funded right now, where's my keys? In California, typically that doesn't work that way. In many states, it doesn't. So you're going to sign your loan documents. We're going to upload them. Again, why I like it done in my office, because you can sign and I can upload within minutes. We're going to upload them so that the funder, another person, gets them, and they're going to check them in and they're going to review everything and make sure signatures weren't missed and dates weren't missed and all the little boxes that need to be checked were checked. And then they're going to issue funding conditions. So we have additional conditions. And most of the time, the funding conditions are just requirements from escrow or title, just making sure that the insurance is correct or the escrow officer signed where they needed to sign. So that's typically the funding conditions. But sometimes you'll get something that we'll be working on and we'll push it. We'll get an exception to push it to a prior to fund condition. And then that means the underwriter has to go back in and sign off on that again. So the loan will fund, and then I get to make the fun phone call and tell somebody, congratulations, you have a new mortgage. And then they don't ever tell me anything after that. So the loan records typically later that day, sometimes the following day. And on a purchase, they're always going to call the agents and let the agents know that it's recorded. So Roy, you get to make the really fun call and say, congratulations, you have a house. I just get to tell them they have a loan. And then once they get the funding, once they have the recording confirmation, it's all up to the agent, depending on the contract, as to how quickly the client gets their keys.
Here you go. This is my fun part. Okay, I've got the keys. I'm handing the keys over to my happy buyer. They're excited. We go and we pop the bubbly. We take a few photographs. Everybody's really happy. And then the next thing is, what happens next?
Well, after the loan funds and records, oftentimes it's going to get set up for servicing. So many times our company is servicing our own loans now. However, we use what's called a sub-servicing company. So sometimes the loan gets sold. Regardless, they're probably going to get a letter in the mail within 30 days, just a welcome letter. Sometimes it changes the address of where to mail the payment or who to mail the payment to. Even if they sell the loan, they sell the servicing, they can't change any of the terms of the loan. So whatever you sign and agree to, just know none of that can ever be changed. But I always tell my clients, don't make your first payment early, because that's the first payment's the one that tends to get, everything's just being set up. So make that one on time. And don't forget that you're probably going to skip at least 1 month before you make your first house payment. So it's based on when loan docs are drawn. So if I have a loan doc that's drawn in February, if somebody's funding today, their first payment won't be until April 1st, unless they signed loan documents in January, and then we can do what's called funding into the month. So if we were funding a loan today with January loan documents, they would get a 3-day interest credit, and their first payment would be due March 1st. And there's strategic reasons why we might do that for different scenarios. So it doesn't mean it's bad. It's just what it is. But that's where you just want to talk to your loan officer and find out exactly when the first payment's going to be and the pros and cons of pushing it out or pushing it into a month, because there are some definite advantages to do it that way in certain situations.
Jeannette, I want to thank you today for taking us down the roadmap of a loan. And I think you explained a lot of the terms, makes it easy for us. And we know it's a long process. It frays the nerves at times of buyers and agents, but all working together, we get to the end of the journey in the end. Thank you for taking us through that. And I would say to everybody, as Jeannette said, you can make your first payment in April. By then, you hopefully will have a big tax refund to be able to make your home payment. So rates are low, incredibly low. You need any questions answered regarding refi rates, Virginia? Anybody else, give Jeannette a call. Looking to list a home today because we need inventory. Guarantee you'll get a good price for your home. Jeannette, thanks for joining me. See you next week.
You got it. Take care, Roy.
Best of luck. Bye.
Bye-bye.